What's going on, everybody? It is your boy Go to Trades, and I'm back with another weekly analysis of the stock market ahead, so that me, you, and I, both of us, maybe all three of us, can do some, some nice, fun stuff, right? Regarding the market, of course, only just the market, right? Anyways, guys, we want to be prepared for the stock market ahead. Now, the reason why we want to be prepared for the stock market ahead is because, look, the stock market is super volatile, right? Super volatile. And I told you guys, right, when I came back making videos in January, I said that the market it's a weird place right now. I said it in February. It's going to be a very hard market to trade. I said it in February. I said it in January. I said it's going to be a very, very hard market to trade. And I said, even though it's going to be a hard market, on this channel, we will master it. I said that. We will master this market. And I wasn't playing with y'all, right? And we've been killing it in the Discord. I'm going to go over some of the trades we've done for last week. It was just an amazing week. What can I say? It was just amazing, And it's only going to get better because we are going to read this market like a book. So make sure that you guys are paying attention to what I got to say every week. These videos come out every Sunday. I'm almost done with school. I will be putting more time into more videos and different types of content into this channel. It's going to be a better channel. It's going to be amazing. So please be, cognizant. Make sure you're following the channel. Make sure you're subscribing to the channel. Make sure you have post notifications to the channel. Make sure you're following the social media. Make sure you're even down below in the description, you're joining the Discord. The Discord is amazing. It's a great Discord, okay? Now, and it's very small too, but we're trying to get people on it, man. Super free. It's free 99. Free. Free is good for me. Anyways, guys, let's look at this, right? Now, the market is very volatile. We already know the stuff about the tariffs. We know that Trump can tweet anything, right? We know that Trump can literally tweet anything and the market will move. So it's when you're in a market like this that's pretty much news driven and catalyst slapping, and it's pretty hard to trade it. But one thing that I will tell you, that if it's in the news, it's already in the charts, right? So technical analysis, for the people that thinks technical analysis is dead, you are sadly mistaken. Technical analysis, it's the most prominent it's ever been, and it's because big money's showing their hands. They are showing their hands, and it's super easy to read. Now, again, if you're paying attention to this channel, you're not going to be led astray, because everything we've been saying every week, that's going to happen in the market. It's been happening. Now, I'm not saying that I'm just some guru and some magic man. I'm not. I'm just telling you the probability of stuff that can happen due to the charts, okay? Now, look, as we can see, and then I'm going to get into the analysis, as we can see for the stock market S&P 500 index heat map here, we can see that, the market looks a little bit risk on, right? We got technology service, electronic technology, both in the green. You got retail trade in the green, producer manufacturing in the green. You even have finance a little bit mixed. You still have some pockets of red, but it's pretty much still in the green. You have a lot of green on this left side of the charts. Now, if you look on the right side, it's a lot of red. Playboy Cardi, whole lot of red. It's a lot of red, and it's really red in the defective sector. I said defensive sector. Defensive sector names. And because of that, you would kind of assume that, hey, maybe we can be switching to positive gamma, and we could be switching to calls in the market. We could be switching to, buyers really stepping in and being aggressive. Now, do I think that's the case? Not really, but yes, right? I do think that there's two sides of the coin, and I do think that buyers are stepping in, and we're going to see even more buyers step in. But where does that lead to? I do think it leads to a dead cat bounce. Now, I have some reasoning towards that, and obviously, as we progress through this analysis video, you're gonna kind of guess why I'm kind of leaning towards that statement, right? But anyways, let's continue. Okay, so now let's go to this week's major U.S. economic reports and Fed speakers. So for Monday, we don't really have too much. You got Bostic speaking after the market. You have things happening after the market, so it's really a nothing burger. On Tuesday, you do have some price index What else we have? Wednesday we have U.S. retail sales. What's going on here? Industrial production. Home builder confidence index is going to be pretty important because home builders are getting crushed right now. But on Thursday is going to be the main thing, and it's going to be initial jobs claims. We got to see how that affects the market. So on 8:30 a.m. I would set my calendar, set my alerts, and that's what I'd be watching for. So pretty much this week is really just it's a strong week for just technical analysis. I wouldn't expect any catalysts to really affect the price action. Maybe until Thursday. So Thursday, that's probably when you're gonna get some stuff. I guess next week we might have some good information here. Do we? You have initial jobless claims. I mean, for the most part, it looks like this is gonna be for the next 2 weeks. It looked like it's gonna be a really technical driven market. Well, kinda, because we still have earnings, and earnings is coming out. We're gonna kick off earnings season with some banks coming out. So this might just be the catalyst here. We have the First Bank, Citibank, Bank of America. You even have some what is it called? Healthcare names, Johnson and Johnson, health and tech, biotech names. It's gonna be what we're gonna see. We're gonna see. And on Wednesday and Thursday we do have some chip names. We have ASML, we have Taiwan Semis, and maybe this might shake up the market a little bit. I'm still bearish on chips. I still think the worst is not over. And my favorite look for this week is Netflix. And I'm going to explain more on Netflix, what the chart is telling me is going to happen. A lot of people don't gamble on earnings, but I'm not going to say I'm going to play it, but I'm really leaning on it. I'm going to see how the price action for the week plays out, but I am really leaning on playing Netflix earnings this week. I do like Netflix to the downside, and I'm going to kind of explain why, and I do have some analysis on that, so we'll see. Now let's switch over to our weekly performance. So obviously every time we make a video, I always tell you guys about my weekly performance that I did the prior week. I've been doing that ever since this year started. And yeah, so just to continue on from last week was a really good week. We made almost $6 grand last week. That was amazing. This week, for week 2 of April, we made almost $3 grand. So here's pretty much it. You can see kind of like the spreads are like kind of crazy, right? You have up $100, up 290, then up 1,000, then up 600. Look, guys, not every trade or every day is gonna be like a major crazy amount. Sometimes I'm gonna have the small wins, like the $100, the $50. Like sometimes you're gonna get the small wins, but those wins add up. If you notice, my net profit for the month so far is $8 grand, right? And that's cool. But what I'm really paying attention to is the trade 1%, right? My trade 1% is at 81%. That means out of all the trades that I put 16 trades out. Out of all 16 trades, 13 of them were winners, and only 3 of them were losers. That's what I like to see. In the 80s, that is amazing. An 80% win rate. That's amazing. Profit factor, I have a profit factor of 14. It's pretty good, well, really good. And a day win of 85%. That's amazing. So I only lost 1 day so far. And here's my average win rate to loss trade number thing. Okay, so for every win, it's about $600. For every lose, it's about $200. That's pretty good. That's about a 330 ratio. Amazing. Anyways, this week, my base trade that I kind of want to highlight, I want to highlight Apple, right? This was an amazing trade, and honestly, I could have made even more. Like, here was the maximum profit I could have made, and it's where I sold. I should have held on a little bit more, but you know, I took my profit. When I take my profit. I made this trade while I was kind of already busy with something, so I couldn't really pay too much attention to it. So as you can see, I sold off on this wick here, when honestly I could have held for longer and got a better return, but look, I was busy. I wasn't gonna really just sit here and watch the trade. But let me go ahead and show you guys on the hourly, because it paints a better picture. So on the hourly, we seen a double bottom forming, and the double bottom was here. We seen double bottom forming from like the prior day, and then we seen volume picking up, right? So once we saw the volume picking up, that's when I knew that, okay, this can be a good buy zone. So we end up starting position here, And as you can see, over like a span of, this is just an hourly chart. Let me go to 5 minute. You see the volume spike, and then as time goes on, you start seeing it starting to stabilize, but you're breaking key levels. So we're just really just waiting for that breakout leg. So once if you can see it here, we had like this level here of 180. You kept bouncing around 180. Once you broke out of the 180 level around like 1 o'clock, you had that break, you had the retest, and then you found volume kind of stepping in here on a breakout and on the retest. And then once you got like that push up, you see the major volume stepping in. And once that major volume step in, like that's when it's like, okay, boom. This is the majority of the move that we were kind of looking for anyways, right? So we got all the way to 190. That was my target. So we ended up taking profit at 190. And again, we got in at around 175. So like that was an amazing move up, amazing. So we end up getting almost over, well, not almost. We got over 100% on this trade, but we end up taking profit for a net return of 70%. Not bad, but obviously we could have made even more. So pretty good trade. But obviously we'll get better. Could have made more, but hey, I like Apple a lot. That was a good trade. Google was pretty similar. I like Google here. I pretty much maximized on my profit on Google. We pretty much similar to Apple. We seen the volume spike. We seen the double bottom play. It's hard to see it on the 15 minute. Oh, this is a 10 minute. It's hard to see it on the 15 minute, but we seen a double bottom play. Buyers start stepping up. Look, everything we did, we posted in the Discord. We had a whole rundown analysis on it, and it just worked out, right? We had this major push up. We sold into strength instead of selling out of it. So it was a pretty good trade overall. Did pretty good. And this was just a solid week. Like, we didn't even do too much. Even on Friday session, look at how we made all this money throughout the week, and on Friday we did nothing. Like, Friday was just a whole bunch of chop fest. Now, you did run up a little bit on Friday, but I wasn't gonna play that crap, man. Like, we don't gotta play every single day. And that's what I like. Even last month, right? There's days we didn't even play. Look, 0, 0, 0, 0, and blanks. Like, we didn't even play every day, So not every day is a day to trade, in my humble opinion. So that's really it, guys. If you guys want to see more of this, again, make sure to like, comment, and subscribe. All that good stuff. Anyways, let's keep going. Next, let's look at the US dollar and the US yields. I don't want to go too in depth with this because I think right now we're at these levels that I haven't seen in a while. So, I can't really say. I have a trick to analyzing the dollar and the yields, but for right now, it looks like trends are changing. So it's kind of hard to get a trend out of these. So I don't want to spend too much time on them. But all I can say is you're down here on the dollar. You haven't been at the 99s since, what is this? This is July 2023. So that's a very long time ago. Let's actually see where the NASDAQ was at that time, right? So the NASDAQ was at that time. This was when you started basing before you start going lower in the markets. But you were getting close. Hey, but you were getting close to a bottom. So here around this time, you started basing. We were going higher a little bit. You started basing, and then we started going sideways to down in the markets while the dollar started to rally. So maybe if we start seeing the dollar rally down here, we start seeing the dollar rally and get into these major resistances, maybe that's when we'll find a nice support zone on the NASDAQ. Who knows? But all we could do is just watch at this stage. Like, we just been going straight down on the dollar. You're starting to base. So let's just see where we end up. On the U.S. yields, pretty much similar. You did get like a spike this week, so you can kind of see that the bond market is pretty much freaking out. Like, you had yields just spiking like this. I never seen it spike like that, like in the day. Like, even if you look on a daily chart, like, you just spiked. You just kept going and going. I'm just like, dang, what the heck? So bond market's kind of freaking out. It could be due to that China situation that happened. Apparently, China and a whole bunch of other markets are selling the bonds. So, hey, maybe. So, as of right now, the macroeconomic charts here, I would just kind of really pay attention to equity market right now. I wouldn't, under the hood, it's hard to analyze. I don't want to give you guys a false positive or a real negative, okay? Next, let's go into the futures market. Now, the futures market is where the money's at, in my opinion, mainly because it's telling you like everything you need to see. It's showing you everything you need to see. And first, let me go over to NASDAQ, and I'll go over the S&P. Those are the most important charts in my humble opinion. And look at this, because I want to get you guys out of here fast, right? There's two big zones that I'm watching, right? Two big zones. Now, I told you guys about the buy zone down here. This was an amazing buy. We made some money off of this. Now, here are the two new zones that I'd be watching. You have pretty much two sell zones that bears are going to most likely step in. You have this zone here I call the retest zone, mainly because in this area here, this was where we were basing before we broke down, right? So my philosophy, and I tell this to all of the traders that I talk to, people I'm teaching. One philosophy that I learned throughout my time in trading, that anytime you get a breakout leg, you always get a retest. So here, when we broke down, we got this retest in a zone where there's a lot of confluence, right? So you see how we broke down here, like this was our top. If we look to the left, we could see that this is where we were going sideways for a while, right? So this is like an area of confluence, right? This area is an area of confluence before we end up breaking down into a lower leg, right? Now, as we have this lower leg and we're starting to get, that reverse, right? That reversal going back up, that relief rally. If we see in this retest zone, we can see if we look to our left, this is the area of contention where we can see a whole bunch of action coming here. I don't even know if contingent is a real word. I don't know. I just wanted to sound cool. And but look, this is where I see a lot of action going on here. This is a place of interest, right? So if you look to the left, this is a place of interest. This is where I see bears stepping in, right? So this is called a retest trade, right? So us coming from down here into, where our demand was, we found buyers kind of just rallying. It was just a rip your face rally into this area of confluence, right? Over here. So this is the retest trade that I'm looking for. If we can get some type of retest here at 19.7, 19.671, this is where I look for sellers to step back in, right? Once you get that breakdown, I do believe that if we get some type of double bottom down here, because obviously down here is also a place of, a lot of action. So even if we get some type of double bottom here, I could see us potentially breaking back out. If we break back out and break this retest zone, I do think our major zone to be watching out for sellers comes in this zone here, right? Because remember what I said, every time you get a breakout leg, you try to retest. This is your area of retest. This is like the nail in the coffin, right? If we come up here to about 21.5, 21.2, if we come back up here and we fail this is when we are going to have like a major bear market, in my humble opinion. You have a head and shoulders forming, left shoulder, head, and this is where your right shoulder would be. And once you break down out of this, I mean, guys, you have room all the way down. Like, you have room all the way down to even when all of this started, right? So where did all this start? Start right here. 2023. You have room all the way down here, right, to where everything started. So this is kind of what I'm watching. Now, we have to be kind of more reactive. We can't really predict what's going to happen, but I'm just telling you what makes sense to me. And it all starts from here, right? It all starts from here. It starts from this retest zone. If we get, it really just depends. If we get a sell down from this retest zone and we base here, then I could see this happening, right? I could see that happening. So again, if we get a retest zone test here, we fail, and then we base, right? Then we will get into the sell zone. I really think that's going to happen, right? Now, another alternative that can happen is if we come into this retest zone, we sell down, and we just continue, selling off. That can also happen. Right? So anything can happen in this market, so it's kind of hard to predict. But I do think that the base case is that we're gonna get a retest into a sell here. So that's what I'm watching for. This is where I would want to trade. I want to trade this area to where we can retest. Now, why do I think this is the area we're gonna retest? If we zoom in, we could kind of see that we have holes on the chart. We have a hole right here, and we have a hole right here. I wanna clear these holes. You even have a small hole here. Oh, actually, did we? Oh yeah, we got it. Yeah, we filled this hole and then we sold off immediately right after. Right, you can see it. Before our major sell off, we filled this gap and then we dumped. Literally, literally. Once we filled this gap, we dumped. So I can see the same thing happening. Like we can fill this gap and then dump. I can see it. Now, I'm not gonna say it's gonna happen, but I do think it's about a 90-80% chance that that's what the market is setting up for. That's the price action. Now, if we go to the ES, it's pretty much the same thing. Let's go to the weekly. Same thing. You have your retest zone here, and you have your sell zone. Your sell zone is basically aligning with the head and shoulder theory that I'm coming up with. You get a retest zone here. You break down, and you can possibly making a inverse head and shoulders down here. Boom. You retest. You come right back into your sell zone, and then you dump. That's what I think is going to happen. Obviously, I could be wrong. So I'm not going to say I'm a guru because I'm not a guru. I'm just whatever the lines are telling me. Whatever the magic lines are telling me is what I'm watching, okay? So that's what the magic line is kind of hinting to me. But yeah, that's what I like for the ES. Again, if we retest the zone here and we fail, yeah. I'm not going to go back in depth. You guys can read the levels here. So you have the levels between, what is this? Let's make this go down. So you have 56.75, between 56.75 and 55.44. You do have, that's your retest zone. If you fail that, you can come down all the way to one of these zones. I'm not going to mark, it could be any of these zones. I really wouldn't know. Your first zone to test will be like 5,200. If you base 5,200, your main boss, like literally like your main boss level is 5,900 or maybe 5880. I don't know, around there. Yeah, that's where I do believe that you could actually step in, and buyers could step you in and sellers could knock you right back down. So that's what I'm watching for on the ES. Now RTY, the Russell, and the Dow Jones. Now these charts pretty important. They kind of aid with the S&P, kind of give some type of tailwind for that. Now, I do think that the Russell is going to start basing here. You are coming into major demand zones, kind of like what I said last week. This is where I do expect buyers to kind of step in. This is where you were in October 2023. This is where the bull market started. So you're retesting this. If you end up holding it, then I do think we can come back into like 2160. I do think that can happen. Or if not, if we get a lower high at around 2000 right here and then we fail, then yeah, we're going to go even lower. How low can you go? I don't know. Next, we do have the Dow Jones. The Dow Jones pretty interesting here because I like the Dow Jones a little bit. Look at this monthly chart so far. It looks pretty good still. So you're still in your monthly uptrend. You still look good. So, I mean, the Dow Jones still haven't really flashed any crazy warnings. And even though you even got down here to your major support, you're finding buyers here. Buyers are stepping in like aggressively. Let's look at the volume. Oh my gosh, this is the most volume that you had. Let's see. This is the most volume that you had since January 2023. Oh, January 2022. Oh, snap. Oh, you got something similar. Wow. You got something similar. You got, this is actually, yeah, you got something similar. Wow. So the last time you had volume like this was in the bear market of 22, where everything was kind of falling, found buyers, and you made a lower high. Oh man, maybe that can happen. Who knows? Maybe that can happen. Anything can happen. Who knows? So if we end up getting some type of lower high, so if we cannot break above 41.5, if you can't break above this, then that's when I'd be kind of scared. And your boss level to beat would be above this level, 42,800. If you can break above 42,800, then I do think you are setting up some type of head and shoulders. As you can see, I went over this last week. Boom, okay? So that is important. Make sure you're watching. Anything can happen in this market, so make sure you are vigilant. Next, let's go over to our tech chart. The tech chart is the most important thing in my opinion right now, right? Mainly because I do think this is where the money is going to be made this week. The tech and the chip chart. Why? Let's go over it. When we look at the big tech chart, right? Look at the big tech. Big tech, what do you see here? You see a clear downtrend. You broke down out of this multi-year uptrend. You broke down. And now you're trying to retest the breakdown, right? And you're failing the retest of the breakdown. So if we continue, if we cannot break above 2,900, guys, right? If we cannot break above 2,900, I do think that we're going to sell. As a matter of fact, I do think this is the zone that I'm watching. If we get some type of gap fill here, there's a small gap. If we come up here to about 2,800, so between 2,800, 2,818, if we come around here and we retest, I do think that's going to set up the sell. I do think that you're setting up to sell on tech. You're in these resistance pockets. In these resistance pockets, this is where we found sellers. And I do think, you just came from a lower low of the lowest low. And now you're just making a lower high, finding weakness on a lower high. Let's see where volume is. Volume is spiking. Is it spiking? Yes, volume is starting to spike. I do think that we are setting up to sell. I do think we are setting up to sell here. What do you guys think down below in the comments? I do think, like, if we sell down here, this will be a major sell. Because, I mean, you still have room. Like, you still have room between 2,300, between 2,300 and 2,200. Oh, my God, you have more room toward the downside. So, at this stage, I do think big tech is still looking kind of spooky. I do think big tech is still looking kind of spooky, and that's what I'm watching for. As you can see, big tech, that includes Netflix, Tesla, Apple, Amazon, Nvidia, Microsoft, Google, and Meta. So I'm watching those names like a hawk. Next, you have the XLK fund. This is your technology for the SPY ETF. Now, you are coming into these major area of resistance. So this used to be your resistance, was acting as support before, but now it's acting as resistance again. So it looks like you're about to, hit some type of distribution. And this looks like a monthly distribution. Like we've been talking about it for a while. So if we cannot break above 210, so this week we need to break above 210. If we can't break above 210 this week, I do think we're setting up to sell heavily. Now, the markets that I'd be watching for, or the stocks that I'd be watching for this sell, if we cannot break above 210, I'd be watching for Nvidia, Microsoft, and Apple. Those are the big three names that are in this fund. My biggest name that I'd be watching for is Nvidia, and I'll kind of explain why later on in this video. Next, we do have QQQ. QQQ, same thing that I kind of explained with the NASDAQ. I do think that we're kind of setting up to sell. We do have a gap to fill. We almost filled the gap here at 468. I do think that we're trying to target 474. If we come up and we rally to 474, it's going to be a bull trap, and that's where I expect bears to come in and slap you down. That 474, like, look, this area was when we were going sideways for weeks, for like maybe 2 weeks before we end up breaking down. So this is your area where I do think like a lot of activity is in this area. So even if we come down, if we come up, fill this gap, I do think we'll come right back down. So that's what I'm watching for on the QQQ. Next, let's go over to chips. Chips, pretty interesting, right? I like chips a lot because if you fail getting back above your neckline on all of these charts, you're gonna see purgatory, right? Now, where's this neckline I'm talking about? So your neckline on SMH is between 199 and 205. If you can't hold above 205, so if we cannot close the week above 205, we're bearish, right? Now, even if we come back up to like 214 or whatever, it wouldn't matter. If we can't hold it to end the week, we're bearish, right? So I do think that this week we can try it again and try to come back above. We might fail to make another lower high on the weekly and another lower low. And that's why I think Nvidia is probably setting up to do some like crazy stuff, like that, back down to like the 90s. Same thing with XSD. XSD, you're still falling. You don't want to catch a falling knife. You're just free falling at this stage. You still look terrible on XSD. There's no real levels to watch. You just gotta you're bearish until you can come back up to 206. You're bearish, right? Similar to the SMH SOXX, you broke your neckline and you're trying to retest and you failed the retest. So you're making a lower high on the retest coming off of a lower low. You look terrible, right? Now, again, I told you guys last week, if we end up closing below 144 or even going underneath 144, you look terrible. You look really bad. So we end up making this higher low from this previous low here. So technically on the higher time frames, we're still hanging in there, but a failure to close above one of these zones, failure to close above 180, between 180 and 185, if we can't close above like one of these zones here on the weekly, then there's no reason to be actually super bullish on chips, right? Even if you're catching like these upward momentum moves, like short-term bounces, cool. I mean, I wouldn't mind those, but I wouldn't switch to bull just yet. Maybe we'll switch eventually. We can, but I'm not there yet. Okay, so we pretty much got through all of the charts. The sector charts that I usually watch, there's nothing that I'm particularly watching for. I mean, you got energy breaking down, XLV looking bad. I mean, it looks like you're about to dump here on the healthcare names. You have XOP doing what it's just hanging in there. XLI looking terrible. Everything still looks pretty bearish. Like all across the board, everything still looks pretty bearish. There's nothing that even financial still looking bearish. Like you broke down out of your weekly uptrend. Yeah, your yearly uptrend. You're breaking down. You're making lower lows, lower highs. You're trying to break back above 47. This is your neckline of that Head and Shoulders breakdown that you had. You look bad. You look really, 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 really bad. All across the board. So that's why I'm not using any sectors that I'm really watching for, because everything just looked bad. So I want to leave you guys with this, right? These are the names that I'm watching for the week. First, let's go over Netflix. This is going to be the name that I really care about the most. I want to see what happens this week for earnings. But I do think that if my thesis is correct, we can be rolling in some hard cash, right? So we do have left shoulder, head, and right shoulder. Formed, not even forming, it's formed, right? So if this Head and Shoulder is actually a Head and Shoulders, then we should be playing the downside and looking for this gap fill down here. We have a gap fill at 700. We literally have a gap fill right here at 700. This is where I believe buyers are ready to get loaded up, right? Now, what's pretty interesting is that if I show you guys my indicators, this is one of the indicators that I like to use. I like to use the like my moving average crosses. So you have the 9 and 21. I like to use the 9 and the 21. You can use whatever you want to use. But one thing I do like about it is that it gives me some type of momentum, especially when they cross, right? Now, what's interesting is that if I can, let's erase all my drawings here. Boom, erase hide drawings, right? What's pretty interesting is that this is my 9 and this is my 21. So my 21 monthly on every single chart, every single index have already hit your 21 monthly. Even all the big tech names have hit the 21 monthly, I believe. Don't quote me. I think all of them. I think Netflix is the only big tech name that hasn't hit it, right? And one of the biggest patterns that I see here, you have a gravestone doji right up here with a star pattern, the bear star pattern, where you are forming a basically this is one of the biggest sell signals that you can see, and it's on the monthly, right? And with this happening, you still haven't touched your 21 monthly. All these charts already touched the 21 monthly, and it's aligning here at 678, around there. Not only does it align there, but you still you have a bullish order block sitting here as well. And these are just indicators, right? Indicators aren't 100%. But even if we don't hide the drawings and we zoom in a little bit, like I said, you have a gap too, right? You have a gap too. So you having a gap here that is basically in the same area where everything is pretty much aligning, guys, come on. You have a gap here where everything is pretty much aligning. And look, this is a head and shoulders. Everywhere on all these charts, you're already at the 21 monthly. So even you could check the NASDAQ, you could check the ES, like they're already there. And you've been holding this and wait. It looks like Netflix has just been holding this area looking for that catalyst, and it could just be earnings. Earnings could be that catalyst. Now, if you want to play that play toward the downside, if you get some time, guys, like, I mean, if you buy time, like I'm talking about December contracts, January contracts on Netflix, you look decent. Now, it's pretty hefty, pretty expensive, like maybe $7,000 a contract. But guess what, guys? This looks good. Because even if you come down here, like you look like, that's like a over 100% play right there. You look really, really, really good. Now, obviously, this can, backfire and maybe you might rally back up, Now, I personally don't think so. I don't think you're just going to rally back up. Even if we come down and we check this out, the most that you could probably rally to, in my humble opinion, you might just rally to like maybe 960. That's like the most you could probably rally up to. And I mean, that risk reward, that 960 all the way down to 700, come on. That ratio is insane, right? So I like it. I like Netflix. I like Netflix for the downside. I do think that to start the week, we are going to rally. So even if we do rally to start the week and we come up to 960, 950, suck in some buyers, I do think that this is going to be the biggest bull trap that's been setting up ever since November of 2024. I think ever since Trump was elected, this has been the biggest bull trap ever. All the stocks, most of the stocks have all been, knocked off from that Trump election. So what makes Netflix that different, So I'm watching Netflix for the downside. I'm that's my main play for I gave you free game. That's my main play for the week. Lastly is NVIDIA. Same thing with NVIDIA. NVIDIA setting up for a major flush. You're setting up your head and shoulders. Here's your neckline of your head and shoulders right here. This is your neckline, right? We retest that neckline. We found buyers. Awesome. Now we want that right shoulder. Your right shoulder lies between 136. It lies between 136 and 130. So I do think that even if we come up and we retest this 131 area, this is where I want to buy some puts, right? And even if we start rallying above and we even get to 140, I'm gonna average more as we continue rallying. I do think that we're setting up to fail. You look terrible on all the chip names. I don't see Netflix as a I don't see it as something that's gonna change anything. Like, you look bad. This is a nasty Head and Shoulders. It looks like we're gonna actually come back down to $77, $80. That's what I see in the video's future. That's me. Anyways, if you guys enjoyed the video, make sure to leave a like, comment, subscribe if you're new. Gave you guys some free game. And join the Discord. Follow me on Twitter. I'm gonna, make sure I'm posting on Twitter, giving you guys free game on there as well. And join the Discord. It's free. Come on, guys. Like, be for real. It's free, bro. Like, you're gonna get me upset, man. You guys are gonna get me upset. It's free. Anyways, with that being said, stay green this week and have a wonderful week and the rest of your day. I'm out.